Good morning, traders. It's 8:04 a.m. on Tuesday, the 15th of December, 2020. Thanks for joining me on episode number 1899. I guess the cat has something to say about today's broadcast. Excuse the noise in the background. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning is... This morning's market stance, we have risk on sentiment from yesterday's close. The market has rallied overnight, trading currently 146,000 contracts in the overnight session on 32 points of range or so. Overnight inventory is 64.2% to the buy side, to the long side. On what is a double distribution profile, the market is just moving back into and around the MC point of control. We'll go over that in a minute in the 3660 area. Allocation after yesterday's sell-off is into equities. As you can see, they're nice and blue today. Crude oil, gold, silver leading the pack today. Silver is really pushing. And money's coming out of the treasuries. The Bund is up 7 ticks or so, and the dollar slightly down. Today, what's on deck? The vaccine is actually making its way around the United States and across the world, thankfully. And there's also news that the U.S. election has been officially sealed for Biden yesterday, with the Electoral College confirming President-elect Biden, making him officially a president-elect now. And the market is not sure if the market's responding to that, but that was expected, and it's done. So now it's about campaigning in Georgia and so on to determine who controls the Senate. Today we're looking at industrial production at 9:15 in about 10 minutes or so, or 8 minutes. IBD tip at 10 Eastern, and then net tick flows and API crude oil stock change after the close today at 4:30. Okay, so that's what we're looking at for this session. Here's the expectation yesterday. Just a quick summary of what we're looking for. We're looking at here as drivers, according to Reuters. As I said, the Electoral College win for Biden. Europe is really clamping down on the big tech stocks. The big tech stocks, there are moves against Google, Facebook, and this morning Irish watchdog finds Twitter and landmark for EU data privacy regime, fines them 450,000 euros, which seems like a blip for Twitter. Stock futures rose as progress towards a government spending bill and COVID-19 relief measures kept spirits high, while investors awaited new economic cues from the Federal Reserve's final meeting of the year, which is tomorrow. European shares were up, with optimism from vaccine rollouts helping traders shake off concerns about tighter curbs due to the rising cases. And that's what according to Reuters, that's what the market is focused on. Yesterday, the primary scenario, given the gap situation, one second. Given the gap situation, was looking for a gap and go. Really was looking for a dip down into the 75-76 area and a push to 91. If you recall, 91.50 was a big area and was expected to top out the day's range. This was basically the scenario that played out in the morning, and then we ended up turning around and pushing way lower and into the prior day's range, which was really unexpected. Yesterday's range expansion was unexpected, but scenario one played out early. Expected to turn down towards the close, but it ended up pushing a lot more than that. Here it is, opens. We do not have a clear, I set this up as an OSH, but it's not an OSH. There was no real swing down rotation. This was just a pullback on the way up. You could see as soon as we opened, we moved away from the opening price and pushed directly into 91.50 on the dot. The first test was 91. We pushed by 2 ticks and what looked like a failed tick, a failed auction there. Pushes by 2 ticks, and immediately we have our first impulse of the day down. And so hands off the buy button at this point. Pullback, would have loved a pullback. I was expecting a pullback to at least right here. That would have been nice, but the pullback was very shallow before we created a secondary impulse. Impulses now are 8.5 points in magnitude. 8.5 point rotations are considered an impulse statistically. Sets up a second impulse, so we can expect a continuation. And the area for the continuation would be the IB low with the open to back that up as your stop point. Anything above the open would stop us out. Look for this. Look for a continuation, and it comes all the way back. This was not easy to hold on through, and then it finally pushes through and breaks down. Let me remove these stock zones from here. But in either case, the market successfully tests 91.50, which was expected to be the high of yesterday. Puts in the 2 key rotations of the day early on are down, and then it follows up with an even wider extension, which sets us up for an even more lower rotation. So at that point, anybody who's short is aiming for the high of the prior session at 57.75, brings us back into the MC point of control of this region at 59.25. That becomes a big target, and it's hit right here. Finally, we get into the prior day's range. We don't really get a bounce. It gets close to the prior close and falls right into the prior day's range. So once it falls into the prior day's range, we start to look for the prior day's close, the prior day's value high. If it's a balance day, the prior day's point of control, and then any significant levels. And the significant level was the all-time high from November 9th, as marked by the master levels here. Hits it right on the nose, 37.50 versus 37 even, and then the day comes to an end. In the overnight session, it's easy to narrate in hindsight, but I tell you, that move down was not easy to trade. It looks like it was a beauty, just get short and hold. But unless you got in at an advantageous level and watched the market move away quickly, it was hard to hold on for that for the run here. So I'm not going to make light of it. It did take quite a few stabs to be able to get short and hold on, because the pullbacks were pretty aggressive until it finally failed through. The overnight session opens back up pretty dead right before the Asian Open. The Asian Open happens, and then it finally pushes a lower low to 36.25 and finally closes this RTH test right here, RTH all-time high test from November 9th. And then from there, Europeans come in and they take it right back up, and we have a double distribution profile coming into today. Double distribution profile and giving us this 55 area as an area to watch out for. We have a low volume node right here, low volume zone. We have the full session mid and VWAP right there. Last week's close right on top of there, and the double TPO high from Friday in this region. So I'm watching this. This becomes this 54 to 57 area. 54, 56, 57 area becomes kind of the line in the sand for me today. As long as it stays above this level, we are likely to keep migrating up and work ourselves back to the 3680, 82 area up top. Okay, so to look at what we've done, we saw people talking about, oh yeah, this is the big move down and so on. To look at what we've done despite the selling yesterday, what we did is we pushed to that 91.50, tested the prior day's point of control, tested the high of 2 weeks ago, the 91.75. So we got to the 91.50 and we rolled right over and pushed down. But overall, we established one time framing higher, which is in line with the weekly. So I'm expecting dips to be bought as long as this 24.50 remains intact. I expect dips to be bought back up, and I'm looking for today to move back into 85.75 as the key play. Why? Because the long-term player is monitoring the movement across the weekly, and the movement across the weekly is putting in higher lows. The trend there is intact. The trend on the daily is just beginning with yesterday with the higher low. We're one time framing up. And overall, yes, we did sell on the gap and push down into the Friday range, but we found a nice bottom from way back here. Right there is the 36.37. That's the level we tested yesterday during the session and overnight. That's what we've tested. This is a pretty important area right here, and we've bounced off of it. So we're moving back. We're moving back up, and it's likely to continue higher. And again, the target becomes 85.75 again, at least for today. Okay, so that's what we're looking at in terms. I'm not going to show the order flow. There's no point to doing that at this point. One thing I want to make sure you know, actually, is that it is it is expiration week. This Friday's quad witching Friday. Okay, quad witching Friday. Expiration takes place this Friday for 4 products: stock options, single stock futures, and options on futures. All of these expire this Friday, and so there's likely to be some goofy play. The rollover is about 77% done, expecting it to be complete by tomorrow. And so starting with tomorrow's session, we can start leaning a little bit on the delta and how things are proceeding. We're expecting the interference of calendar spreads, selling one contract to buy the next for the purpose of holding the same position through expiration. We expect that to subside and give us a truer view of where the market is. However, going into Friday, we're going to continue to see delta hedging and all that into the expiration. We're going to continue to see futures be used for their purpose, which is to hedge risk and to manage risk, and therefore size will come in and out of the market depending on what's needed to hedge portfolios across the world. So remember, it's just not a good week to be aggressive this week with Friday expiration. And then next week is, of course, Christmas week. We have Monday, Tuesday, Wednesday being normal days, Thursday, Friday being shortened days, and then the following week is New Year's. So this week is the last full week of trading, and it just so happens to be expiration week, as it is every year. So that's where we stand. Here's what we've got for today in terms of expectations and plans. My current screen, there we go. Here's what we're looking for today. So today, with the way things are set up, the fact that we've pushed back into Friday's range back here and put in a higher low on Friday's range, the higher low here, the expectation is to open in range. I'm looking for a pullback probably into the 59 area, which is the MC point of control, which happens to be yesterday's point of control right here. I'm expecting that to get supported. I'm looking for an impulse up. I'm looking for the overnight high to be breached, and I'm for this thing to walk its way back towards the 85.5 MC or weekly point of control before it stalls out. It may continue higher, who knows, as it breaks the 9150 and makes a run towards 3700 and 3702, but the primary scenario is bullish with a minor pullback, and that's based on where things have been and how the auction has proceeded so far. Secondary, we push immediately out of range. We squeeze all the way up into the 77, 78, consolidate up here, stall out, and then pull back and come back to the open before migrating down into yesterday's this morning's lower distribution and yesterday's lower distribution. This is ominous for longs. This is a threat to longs, and so the selling continues, and we may see it try to push this 36.36, and if it pushes the 24.50, if we push this 24.50, we're likely to accelerate very, very quickly down into the 3600. If that happens, that creates a lot of opportunity on the sell side and additional volatility and range. This morning, we do have, with yesterday's profile being a multi-distribution profile, we do have a lot to work through. Yesterday was a very active price discovery type of auction. And so if it does roll over and push down, we expect that carryover. I'm looking for yesterday's action to carry over. Either it's taken back or it's continued down. But yesterday was an impulse day down, given the range that it traded, okay, the rotation that it had yesterday. And so I'm looking for a continuation lower, but we're opening in an area that's above yesterday's mid and has a little bit of support. So again, the area to watch is the 59, and then backing that up is the current mid 55, 52.5, and the VWAP 52, 55. Those are stop areas for longs below there, and looking for a run to 85. That's the key plan for today, or the key trade for today. Hope that helps. I'm going to post more detail tomorrow going forward, but next Wednesday, the 23rd of December, Convergence hosting a fireside chat with its head traders. There are 4 head traders, and there will be a sort of a fireside. Is really not a technical discussion, but more of a journey type of conversation. You can just ask questions and stuff. We're doing this for fun. It'll be at 6 p.m. Eastern. Fireside chats are usually in the evening, 6 p.m. Eastern, and we'll have several traders, professional traders on, and we'll talk markets for about an hour. I'll get you details tomorrow, and it'll be on my Twitter feed at twitter.com/futurestrader71 for details. Good luck, and I hope to catch you there. That's in a week, next Wednesday, the 23rd at 6 p.m. Eastern Time. Good luck, and I'll catch you tomorrow morning. Take care.